Wall Street surged on Friday after strikingly upbeat May job reports unexpectedly provided the clearest evidence yet that the US economy is headed for a quicker than anticipated recovery. Dow jumped 3.15%, S&P jumped 2.62%, and Nasdaq jumps closed near to the all-time high 2.06%. Reliance Jio announced another investment by Adya. Adya acquired 1.16% and invested 5,683 crore rupees in Jio platform. With this investment, the tally is clicking around 1 lakh crore rupees in last 1 month. In backdrop of RBI allowing customer to avail moratorium, this data becomes quite interesting to analyze the impact of COVID-19 situation on banks' book. Data shown on the screen is the percentage of moratorium availed by borrower of the bank compared to the total loan book. This data clearly distinguishes between leaders and laggards in some sense that the bank acquired customer, and in other way the financial health of the borrowers is reflective. Surprisingly, SBI came as leader and the bank is the highest lender in the industry, having a loan book of around 23 lakh crores, while the second highest lender, that is HDFC Bank, which is at arm's length from SBI, has a loan book of around 9 lakh crore. The banks whose loan under moratorium is supposedly at better positions might have dealt the due diligence with the proper care. God forbids, if the COVID-19 situation persists beyond a certain point, then chances of defaulting loans will increase. The pain point for those banks where customers have availed moratorium the most will be higher, and their profitability get impacted due to this COVID-19 situation. Well managed and efficient bank entity like HDFC Bank, State Bank of India, Kotak Mahindra Bank, Axis Bank, ICICI Bank most likely to sail through this COVID-19 disruptions, but other banks should worry. SBI posted Q4 earnings report during the market hour on Friday. Numbers were largely below estimates. Comparing the numbers with the previous year same quarter, State Bank has witnessed 327% jump in net profit, while net interest income were flat. Bank has revealed important information regarding the moratorium availed by the customer, which is to the tune of around 22% that the customers have availed moratorium and 23% of the term loans. L&T posted Q4 earnings reports after market hours on Friday. Numbers were largely below estimates. Profit seen declining 1.6% over the estimates. Revenue also seen declining 3.8% over the estimates, and EBITDA and EBITDA margin also seen declining over the estimates. Owing to COVID-19 disruption impact, L&T has seen its profit, revenue, EBITDA and its margin stagnating over the previous year's same quarter. In Q4, L&T has recorded an order inflow of Rs 57,785 crore. COVID-19 disruption impact can be seen on Exide Q4 earning reports, where profit have fallen 22% below the previous year same quarter numbers. Revenue were 18% down, while EBITDA seen a decline of 29%. Margin also seen a decline of 150 basis point. This is FII index derivative activity of last 5 days. Let us look what FII did on a day when Nifty was up more than 100 points. So on last Friday, FII segment has created more shorts than long. That net resulted the reduction in the long future positions, index future positions, and on the put side we can see basically they have consolidated the positions on the long put side, and in the long call side you can see here a good quantity addition on the long call side. So basically on Friday they have created short and taken long position on call side. Basically they have hedged their positions on Friday. This is USDINR daily charts, and we can see the activity is panning out in a triangular kind of formation, and the current market price is positioned near to the breakout level. In last trading session we have seen the USDINR just breaking out from the daily charts trend line at 75.75. so 75.75 to 75.82 will be quite heavy resistance for USDINR, and in today's market session, if this activity moves up and sustain above 75.75 to 75.82 kind of range, then we may see it is moving towards 76.40 in coming days. Now the support is pegged around 75.45 to 75. On Friday, US market closed more than 3% up after US releases job data, which indicates that economy is recovering on a faster pace, following which SGX Nifty 2 closed more than 100 point up. So on your screen is the 30 minutes chart, and we can see it making a double top formation, but going by the SGX Nifty, market is likely to open more than 100 point plus on Monday. Now let us understand what will be the resistance if market opens more than 100 points up. So if it is opening more than 100 points up, that will be around 10,250 kind of level where the market will likely to open. Now just above, tad above that, a gap resistance area created while the market was falling after COVID-19 pandemic news. So this will act as a strong resistance area, and that area is placed around 10,300. And if we extrapolate the previous last 3 days move on Fibonacci scale, the resistance is coming around 10,335. So going forward, these two price point will act as a strong resistance. First, that will be 10,300, and the second 10,335. So Indian market likely to open higher, buoyed by the US market job data. So for Bank Nifty, the 21,600 will be a strong resistance area. It will act as a double top formation, and if market sustains, Bank Nifty sustains above 21,600 level, 22,000 level can't be ruled out in that scenario. If you find any meaningful information in this video, then subscribe my channel and press bell icon to get future notification.